Intelligence Studio.
Welcome to our comprehensive analysis of Apple's strategic investment in Indonesia. This saga is a fascinating exploration of global business diplomacy, regulatory challenges, and economic implications. Today, we delve deep into Apple's efforts to lift the ban on iPhone sales in Indonesia. Apple Inc. Its recent decision to substantially increase its investment in Indonesia highlights the intricate dance between multinational corporations and national regulatory frameworks. This strategic move aims to lift the ban on iPhone sales, showcasing Apple's commitment to adapting its global strategies to align with local market demands.
Do subscribe and like the video.
In November 2024, Bloomberg reported that Apple Inc. significantly increased its investment proposal in Indonesia. Initially, Apple planned to invest about $10 million in a factory in Bandung, focusing on producing accessories and components. However, in response to Indonesia's regulatory demands, Apple has now proposed an investment of nearly $100 million over 2 years. The Ministry of Industry in Indonesia blocked the iPhone 16 sales permit last month. This decision was based on Apple's failure to meet the 40% domestic content requirement for smartphones. This policy is part of the government's broader strategy to enhance local manufacturing capabilities and stimulate economic growth. According to a report from the World Bank, Indonesia's economy is poised for significant growth, driven by its young, tech-savvy population and increasing digital adoption. The country's GDP growth rate was projected to reach 5.1% in 2024, showcasing a robust economic environment that is attractive to international investors like Apple. Locally, the Jakarta Post of Indonesia highlighted the government's commitment to bolster the domestic manufacturing sector through stringent regulations on foreign companies. This approach aims to create more jobs and foster innovation within the country, aligning with President Prabowo Subianto's economic vision. Despite Apple's increased investment offer, the Ministry of Industry has yet to make a final decision. When Apple executives traveled to Jakarta for negotiations, they were unable to meet with Minister Agus Gumiwang Kartasasmita, instead engaging with the ministry's Director General. This incident underscores the complexities multinational corporations encounter when navigating foreign regulatory environments. Indonesia's tactics resemble protectionist measures seen globally throughout history. In the 1980s, the United States exerted pressure on Japan to open its markets to American goods, leading to significant trade negotiations and agreements. This period marked a pivotal moment in international trade relations, highlighting the delicate balance between national interests and global commerce. In the early 2000s, India imposed restrictions on foreign investment in its retail sector to protect local businesses. This move prompted international companies to adapt their entry strategies, showcasing the complexities of navigating diverse regulatory landscapes. More recently, in 2023, ByteDance Limited, TikTok faced restrictions in Indonesia aimed at shielding the local retail sector from inexpensive Chinese products. This pushback led TikTok to invest $1.5 billion in a joint venture with Tokopedia, part of Indonesia's Go-To, thus securing its position in the market. These historical incidents underscore the ongoing tension between global corporations and national governments, as each seeks to protect its interests while fostering economic growth. The economic implications of Indonesia's policies are profound. By enforcing strict domestic content requirements, the government aims to bolster its local industry and reduce reliance on foreign imports. However, such strong-arm tactics may deter other international firms from investing in Indonesia, particularly those looking to diversify their manufacturing away from China. Apple's increased investment offer is a strategic response to these challenges, reflecting its ambition to tap into Indonesia's vast consumer base of 278 million people. With more than half of the population under 44 and tech-savvy, Indonesia represents a lucrative market opportunity for Apple and other technology companies. However, the pressure on international firms to increase local manufacturing could potentially hinder Indonesia's broader economic objectives. President Prabowo Subianto's administration aims to attract overseas investments to fuel economic growth and fund policy initiatives. Yet, the stringent requirements may send mixed signals to potential investors, affecting the country's appeal as an investment destination. Reflecting on this complex scenario, quotes from historical figures offer valuable insights. Former US President John F. Kennedy once said, "The time to repair the roof is when the sun is shining." This quote emphasizes the importance of proactive strategy and preparation. For Apple, aligning its investment plans with Indonesia's policies before they become obstacles is crucial for ensuring smoother market access. Similarly, economist Adam Smith famously stated, "The real tragedy of the poor is the poverty of their aspirations." In a corporate context, this quote highlights the necessity for strategic vision and adaptability. Apple's increased investment in Indonesia is an acknowledgement of this principle, demonstrating its intent to overcome immediate hurdles and achieve long-term success in a burgeoning market. While the specific beneficiaries of Apple's proposed investment remain unspecified, the company typically collaborates with assembly or component partners such as Foxconn. These partnerships facilitate the production and supply of essential parts for Apple's devices, helping to meet local content requirements and navigate complex regulatory environments. This collaborative approach could serve as a model for other companies facing similar challenges in foreign markets. By working closely with local partners, multinational corporations can better align their strategies with host country policies, fostering mutual growth and development. In conclusion, Apple's strategic investment in Indonesia represents a calculated response to complex regulatory demands and reflects broader trends in international trade and investment. By understanding and adapting to local requirements, Apple not only aims to secure its market position, but also contributes to Indonesia's economic goals. However, the delicate balance between foreign investment and domestic growth requires careful negotiation and collaboration between multinational corporations and host countries. As the global business landscape continues to evolve, companies like Apple must navigate an intricate web of policies, regulations, and market dynamics. By embracing strategic foresight and adaptability, they can overcome challenges and capitalize on emerging opportunities in diverse markets worldwide. Thank you for watching.
And do subscribe to the channel.